Hello, in this video, we're going to talk about home office deduction using this visual right behind me. And this is an infographic that's going to help you guide your clients on how to explain home office deduction. And using this visual, this course is actually just going to be on what is the most important things that clients need to understand and know, and how do we explain it to them. There will be another video that goes into the technical aspect, like all the details of the form, explaining and understanding how depreciation works. So all the technical stuff will be in another video. This video is only to really present to clients how do we talk about home office deduction so clients clearly understand it. And the best way for people to clearly understand it is to follow a visual. Now let's start. We're going to talk about the who, what, why, when, where, and how when it comes to home office deduction. And the first thing is who. Who does it actually relate to? It's going to relate to self-employed individual, and they're going to use part of their home for business use, whether it's storing inventory, whether it's meeting with clients, maybe it's just doing admin work. So who uses home office deduction? Self-employed individuals who have a designated space to do their work at home. Now let's go through the what. What is it that client needs to know? Just a broad overview of what is a home office deduction. And it's pretty much a tax deduction for using a part of the home that is business related. And there are two ways to do the calculation when it comes to seeing how much you could actually deduct. There's something called actual and something called simplified, which we will go through on a little later on about the details of that. And then also letting clients know that any direct expenses relating to the home office, say they paint that room of the home office only, that painting is going to be a direct expense for the home office that they could deduct. So it's really getting tax deductions for using things inside the home office section. Now let's go through the next section, why. Why do we want to do a home office deduction? And it's obvious, because we want a tax deduction. So we want to let clients know that we get to reduce your taxes when we take a home office deduction, and we're reducing things that you're already paying for. So things like rent, mortgage interest, property tax, home insurance, internet, utilities. These are things that people already pay for as part of the personal house. But because they have a home office, now it's an allowable tax deduction or a tax savings by taking a portion of things that they're already paying for. So it's not like they have to go out and spend more money to get this deduction like how regular expenses work. These are things they're already paying for personally, but now because it's a business office deduction, it qualifies for at least a portion of all of these to be deducted, as opposed to if they didn't have a business, if they were just a regular W-2 employee, they can't deduct anything from here off of their taxes. But as a self-employed person, you're allowed to deduct a portion of your home office, which includes all these things: rent, mortgage, interest, home insurance, internet, and utilities. So we went through the who, what, and why. Now let's go through the where. Where is this reported? This is actually reported on the tax return. There's a specific form. Clients, we just say it to the clients so they know that there's a form that they have to fill out as part of their tax return. It's called Form 8829. And this is where you do the detailed calculation of how to come up with the allocation of what percentage is being used for the home office use and what percentage is going to be deducted off of those items that they're paying for, like mortgage interest, rent, utilities, internet. And what's important to know is that this Form 8829, it's vital when it comes to deducting home office expenses, because it goes through the detail of the business use allocation and what portion is going to be deducted versus not deducted. And this form is needed because you can't just do your own side calculation and plug it into an expense category on the Schedule C or as an expense. You have to have this form that comes along with the tax return, and it flows into the Schedule C. And this is the form where it gets complicated, because we have to do all the very detailed categories of like total rent paid, total utilities paid, total internet paid. But I have this little caption right here that says, hey, annoyed of tracking expenses? Take the simplified method. And this is something that we're going to go over with clients as well as an option to choose when it comes to home office deduction. Now, the next thing we want to talk about is when. What are the important dates that clients need to know when it comes to home office deduction? And this little part right here is for the actual method only, and we'll go over the difference between actual and simplified a little later. But for actual method, we want to let the clients know that, hey, this is a year-long process of tracking things, right? So because we got to know every month, what are you paying for utilities and internet? What are you paying for rent or mortgage interest or property tax? So this is a year-long tracking. Luckily, most of these things can be downloaded and they're just saved as a PDF or something. So it makes it a little easier to track at the end of the year. But just letting clients know, hey, this is a year-long process because we got to take every single month. We got to account for every single month. And the next important date is actually the date of filing the tax return, because we want to make sure that when we are in the process of filing the tax return for the client, we ask them, hey, did you do home office deduction? Because we want to report it on the tax return. This is something that we have to do every single year, making sure that clients understand that we report this and it's a different amount every single year. Okay, next, what we're gonna go through is, there's this little tidbit right here on the top where it goes, there's an IRS rule, specific IRS rule that says home office deduction is only allowed if there is exclusive and regular use. And this is the section that goes over what is considered exclusive and regular use, because there's a lot of misconception from clients that just because they think that they have a room designated for with a desk inside of it, that that area is going to be considered home office. But there are very specific rules that we have to follow. Now let's go through this section right here. Exclusive is 100% business use, no personal activities, including walking through. Walking through, the best example would probably be like a loft area. If there's a loft and then there's one desk, one computer that someone does all their work on if they have a home office, but the fact that other people could walk through it to get to other rooms, that could disqualify it from being exclusive use. So because the walking through process will make it not allowed, or IRS won't consider it as exclusive use. And remember, exclusive use is 100% exclusive use, not 99%, not 98%. It has to be 100% exclusive use. So if you have a room designated for your home office, and most of the time you do work in there, but sometimes maybe if they're older, they have grandkids or something, they have their grandkids play in that room, and now there's toys everywhere in that room, that could eliminate it from exclusive use, meaning that because it's not 100% business use, now it becomes a child play area that could create a problem with the IRS and say that that's not a qualified use. The other important key aspect that IRS has is not just exclusive, but it's regular use. We have to make sure that there's frequent and consistent business use, and it's recommended at least once a week to do work in there, because if a client is only using that home office maybe once a quarter or once a month, then it's not regular enough for it to be considered business use. So the IRS is very strict on this rule, is that how frequent is the client actually using that home office. So remember, we have to follow two rules: exclusively used and regularly used. And just to make it clear for clients, giving out some examples of what doesn't qualify, because I think it's easy to understand what actually qualifies, but sometimes clients will think that there are gray areas. There are no gray areas when it comes to this. It's pretty obvious when it comes to what is really considered home office and what's not considered home office, right? So the first thing is, if you're working at the kitchen table, that is not exclusive use because other people eat there and it's a kitchen table. So you're not using that 100% for business. The other one is if you're working inside your bedroom. So even if you have a desk inside your bedroom with your computer and you do 100% of your work there, you regularly use it for your work. That's where you take all the sales calls, you take Zoom meetings, you do your invoices in your bedroom, but on the desk that you're using. Because the desk is shared with the whole bedroom and it's not technically separated, and there's that whole walkthrough thing, that is not exclusively used. The IRS won't allow you to deduct your whole entire bedroom just because you have a desk inside your bedroom and you do all your work in there. It's possible, very possible, if you want to deduct just that small section for the desk and the chair that you're sitting on. But there are very specific rules that it's probably better to have some kind of partition to separate what is the bedroom versus what is that area of the home office that you're trying to deduct. And the most simple way I like to explain it is that if I or anyone, maybe even an IRS agent, were to walk into that room, can they see that this is a designated area specifically just for business? Is it separated enough to show that, hey, there is a personal space and then there is a business space? Another example is working on the bed. Just because you work on the bed 9 hours a day but because you're sleeping in there as well, it's not exclusive use. So we can't use working on the bed as a reason for home office. Now the next thing is working in the living room, the same situation. If you're working on a couch, definitely not exclusive use. But if you do have a little nook that's set up inside the living room, but it's not really partitioned, it's just kind of in the corner and anyone could just kind of just go there, then it's not exclusive use. So we have to make sure that clients understand that we need a clear distinction, a clear separation from what is home office to what is the personal side, right? So usually having a distinct room, a room specifically just for the home office would probably be the best and easiest way to argue home office deduction. But if you do have a little nook in the living room, that probably won't count unless there's some kind of partition that separates it. And the last picture I have is actually more of a joke. It's a panda on a toilet. And I always tell clients, just because you do your business in the bathroom doesn't make your bathroom a home office. Now on this page, there's two last things I want to cover that's super important that clients need to know. The first part is if there's a main working place outside of the home, you can still claim home office deduction if the place is for other businesses use that's not available elsewhere. So what this means is that if a client has an office outside of the home, like a regular office that they go to, but they also do work from home on a periodic basis, well, it's still possible to claim a home office deduction. The old rule never allowed that because you already had an office outside of the home, they won't allow you to take home office. But a new rule came up saying that, hey, that's actually legitimate now because you can't always do all your work inside the office itself. So a good example I had a real estate agent client where she goes into the brokerage, so that's an office outside of the area, outside of her home, and she goes there to meet with clients. They have all the client meetings in there, the presentations, and that's what she uses the brokerage offices for. But in the home office, she actually goes back home, and this is where she does her real estate research. This is where she probably talks to clients on the phone. This is where she does a lot of her invoicing or charging clients. Anything relating to like admin work, that's where she does it in her home office. So we're able to take a home office deduction because of the fact that she does actual real work there, even though she still has a outside office that is separate from her home. And a superpower by having home office deduction is when it comes to mileage. This is a great way because now that you have a home office, anytime you drive out of your home to do other business work, that's considered business miles. So we could calculate anything starting from the home to wherever you go for the client as business miles, as long as it relates to the business, right? So let's just say that the client never had a home office and we'll use the real estate agent client again. So if there was no home office, if that real estate agent, if she were to drive and go meet with a client somewhere else, that is community mileage. That is not considered a business deduction because she is not going from work to another workplace. She's going from personal to work. So that's considered a personal mileage. Now, if she had a home office, anytime she leaves her home office or her house to go to meet with a client at another residence or at the brokerage, that is mileage as business that will qualify as business mileage, and she could deduct those mileage. So that's a super power up because all those mileage adds up. So that's why having a home office is not just deducting your personal residence stuff, but it's also you get this extra power up to be able to deduct even more mileage. Now, let's have some fun. We're gonna go through a knowledge check real quick, right? And there's 4 pictures up here. Which one, A, B, C, or D, which one will qualify as home office deduction expense? Now, if you chose A, sorry, you are wrong. B, you are wrong. C, you are wrong. And D, you are wrong because none of these qualify as home office expense. These are all commingled in a way with something personal. So we'll go through the first picture. This is looks like a desk set up inside a bedroom. There's a bed right here. Because there's no partition, because there's no clear separation of what is home office versus bed, that does not count as home office deduction and it's not exclusively used. The second one, The guy, it looks like he has maybe a nook inside a home. You can see a hallway coming out here. So it looks like people could just walk through from one room to the next room right here. Because of that, it is not considered exclusive use. So we can't deduct this portion at all because there's no partition, there's no clear separation of this being a home office use. The next one is C. This is where I think most people might have chosen because it looks like both people are working, but there's no clear separation of what is the home office. This could be a living room. This is just probably a guy working on his laptop in a living room while there's an office space right here, but there's no clear distinction that this is a home office. Like when you walk into it, it's possible that this is personal use right here, right? And the next thing is the guy working on a kitchen table. Clearly, kitchen table is not home office use. It won't qualify because it's not exclusive. So working at the kitchen table won't count. Let me show you some real pictures of what is home office use. So we have this one. This is a super fancy one where it looks like it's just a desk and 2 chairs for meetings. There's no bed, there's no couch, nothing like that. There's no TV, so nothing that shows any personal use. It's clearly looks like just a fancy ass office, right? There's this one right here, same thing. It's a smaller room. There's a shelf, there's one desk, there's a chair to sit on. Looks like another chair for potential clients or something, but clearly this room right here is a smaller room where it's used only for business itself. There's no bed in here, there's no kids' toys, there's nothing that shows anything that's personal use. They're not storing any personal items in there. They're not storing their skis and their winter clothing in this room right here, right? So that's why it's considered 100% home office and exclusively used. Let's go to this one right here. Obviously, same thing. She's working, she has a printer, it's a desk. There's no indicator or items that looks like it's personal at all. All these looks like legitimate office expenses that she's doing. And same thing here, there is a painting on the wall, but that's okay. That doesn't make it personal. But look there's a very simple, just shelves, desk, computer, a little lounge chair, I guess that's what it is. But there's no indication of any type of personal use. There's no couch, there's no bed, and there's no storage things for personal items, right? So it's really important that clients understand we have to have a clear distinction of what is exclusively used. So if there were toys all over, anywhere, all these, and if there were like dirty laundry, that's personal use. So we got to make it clear, letting clients know that, hey, we need to make sure that this is all business, okay? No dirty laundry inside your home office.